Executive Summary Company, 10 Holdings Inc., NASDAQ, XHLD, headquartered in Langhorne, Pennsylvania. Market cap/price context, penny stock trading around 28 cents, 30 cents, with an estimated market capitalization near $10 million. Liquidity is very low and volatility is high. Thesis: small event media company attempting to pivot into SaaS and digital services. Potential upside depends entirely on successful execution of product expansion and M&A. Downside risk is high due to recurring losses, small cash balance, and thin trading volume. One company overview and business model: core business, historically focused on event planning, production, and broadcasting services. Current model: fee-for-service revenue from events and broadcast services, combined with early-stage attempts to introduce SaaS products aimed at generating recurring subscription revenue. Stage: SaaS initiative is in pilot, early adopter phase. Contribution to revenue is not yet meaningful. To industry and market position. Industry: event production and broadcasting, with overlap into event tech platforms. This sector is fragmented, competitive, and dominated by larger players. Positioning: 10 is a micro-cap regional operator with negligible market share. To grow meaningfully, it would need either a successful SaaS product or strategic acquisitions.
At 3 revenue streams.
Current: roughly $3.5 million in revenue in fiscal 2024, down from prior years. Nearly all comes from services. It's planned. SaaS subscriptions and M&A, no evidence yet of significant recurring revenue. For competitive advantages: existing operational capacity to deliver event production and broadcasting services with some client relationships, lacking no durable moat. SaaS pivot could add defensibility if executed well, but execution risk is very high. 5. Scalability: service operations. Scaling requires capital, geographic expansion, and more staff. SaaS: potential for rapid scalability and margin expansion, but the company must still build product market fit, acquire customers, and finance growth. 6. Financial statement analysis. Income statement FY 2024. Revenue: $3.5 million. Gross profit: $2.8 million. Operating expenses: materially higher year net loss: $2.97 million compared with $1.69 million in 2023. Loss per share approximately equals 12 cents. Balance sheet: assets and cash are limited. Interest expense increased to $210,000 in 2024, up from $52,000 in 2023, reflecting rising financing costs. Cash flow: likely negative operating cash flow consistent with operating losses. Small cash runway. Liquidity is a key risk. 7. Key valuation metrics. PE: not meaningful loss-making. PS: approximately 2.9x, based on $10 million market cap and $3.5 million in revenue. EV/EBITDA: not meaningful negative EBITDA. Ratios dependent on the most recent quarterly filing, but overall picture is weak. 8. Growth potential and TAM. Market size: live events and event tech is a large global market. 10's opportunity: very small slice without differentiation. The SaaS initiative theoretically increases total addressable market, but the company has yet to demonstrate traction. Catalysts: SaaS adoption, revenue growth from acquisitions or strategic partnerships. 9. Competitor landscape: direct regional event production firms and boutique broadcast providers. Indirect: SaaS event tech players like Kevent Hopen and Bizabo, which already have scale and brand recognition. 10. Management and governance structure: small leadership team and board. Details disclosed in filings. Risks: related party transactions and insider influence are common in microcaps. Shareholder oversight is limited. 11. Risks market: economic downturn reduces demand for corporate events. Company-specific: ongoing net losses, small balance sheet, liquidity risk, unproven SaaS model, possible dilution. Geopolitical: minimal direct exposure, but macro conditions can hit event spending. 12. Dividends and shareholder returns: no dividend history. Shareholder returns via buybacks are unlikely given losses and need for capital. 13. Insider and institutional activity. Insider and institutional ownership is minimal. Promotional activities such as market awareness campaigns have been announced, typical of microcaps. Institutional coverage is negligible. 14. Technical analysis signals. Current price, 28 cents 30 cents. Very low liquidity and erratic price swings. Support and resistance levels are unreliable due to thin float and promotional volatility. 15. Recent analyst ratings and news. Fiscal 2024 results showed revenue decline and widened losses. Management continues to emphasize SaaS expansion and early adopter programs. Market awareness and promotional campaigns were launched in mid-2025. Minimal sell-side coverage. Any published targets are from minor outlets and should be treated with caution. 16. Red flags and watchlist items. Cash balance and liquidity in the most recent quarterly filing. Evidence of real SaaS revenue and customer adoption. Insider trades or related party transactions. Float size and trading volume, which affect volatility and manipulation risk. 17. Investment conclusion. 10 Holdings is a speculative microcap. It may appeal only to higher-risk traders betting on a SaaS pivot or promotional catalysts. Traditional investors should avoid until there is proof of revenue growth, reduced losses, or a sustainable recurring revenue model. Dilution, volatility, and liquidity risk remain the dominant concerns.